AI was born to the public in 2022. It's an infant. You don't invest all your money in the infancy of the new development, whether it be high tech or heavy industry. And that's what they've done. They've over-invested in these companies. They're not making money. Again, going back to Slick Willie, again, you make connections between different fields. China came into the World Trade Organization 2 weeks after 9/11, 2001. In 2000, and you look at China's GDP before they came into the World Trade Organization, from 1970 to 2000, it's like this. They get into it and poof, shoots up. In 2000, again, this has everything to do with AI and the dot-com bust. Some 10% of Chinese 18-year-olds went to college. You know what it is today? Almost 70%. This is China. It's a country of 1.4 billion people. What do we have? About 340 million here? Mm-hmm. They got over 1 billion more people. Young people who are all going to college.
And they're not just going to college, Gerald. They're also majoring in STEM degrees. They're not, doing women's studies or underwater basket weaving majors and things like that. I mean, they're actually going out and learning engineering, computer science, that kind of stuff.
You got it. And these are very intelligent people. And again, it's in your magazine. No one is talking about it. China, Beijing is investing very heavily in the AI market. Go back to, again, when we made the forecast in January. No, Chinese company, AI? No, it didn't cost us $100 million to do this. It only cost us $6 million. And we don't need these big chips. And now China's developing. So AI, again, like it, hate it, want it, don't want it, ain't the issue. It's the future. It's the future. And goes back to the dot-com bust. China's going to lead the world in it. And all these companies have overinvested in it. And all the loans they've taken out, all the fake money that they put behind it. And another thing that nobody's talking about that's going to bring down the markets is office building bust. Google up Castle Systems, Kastla. Anyway, it's around
I'll look it up.
5%. Your office vacancy rate, meaning nobody in there, it's around 20% vacant. It was 11% before the COVID war. There's going to be huge failures on office buildings. That's going to bring down the banks. Let's go back to 2023, not ancient history, only 2 years ago. Signature, First Republic, and Silicon Conman Valley Bank. 3 banks went bust. Poof, down goes the markets. Poof, gold prices spike. 3 banks. You're going to see 30, 40, 50 banks start failing. Again, we got to go. Trends are born, they grow, they mature, reach old age, and die. COVID was 5 years ago, the war. Now the leases are coming up and they're not taking all this space back because a lot of people are still working at home and they're only coming back maybe 3 days a week. They don't need all this office space. There's going to be an office building bust that's going to bring down the banks. No one's talking about it. Go back to the Trends Journal, top trends for 2024. Golden year for gold. Gold went up, 27-30%. And then we said, when Trump got into office, gold prices are going to keep spiking. Go back to October 16th. You could look it up. Go to our YouTube, Gerald Celente, or Trends Journal. And I said that gold would go down about $500 an ounce because it really spiked up. And nothing goes straight up or straight down. You have to have a correction. The next day, gold hit $4,379 an ounce. That was the top. The next week, boom, goes way down. $500 it ended up going down. Last Thursday on our podcast, I said gold has to solidify above $4,000 an ounce. Once it finds a solid base over $4,000 an ounce, it's going to keep going back up. And as we went on the air, it was at 4,194. It hit 4,245, and it backed down from it. So it stays above 4,700, 4,070, 4,100. It's going to keep going up. Same with silver. Again, you nailed it. You made it very clear. It's the geopolitical and socioeconomic uncertainties that are going on. And they're going to keep ramping up these wars.
You want to know where this whole thing is going? Take a look at the world around you. Look at the markets. Look at the politicians. Look at the techno hype cycle that everyone keeps drooling over, like it's the second coming of electricity. I've been doing this for over 40 years, tracking trends, building models, mapping out the future long before the mainstream media learns how to pronounce the words they're reporting on. And let me tell you something. We are living through one of the biggest disconnects between reality and fantasy in the history of modern economics. AI, artificial intelligence, born to the public in 2022. That's right, it's an infant, a toddler, a technology that can't even tie its own shoelaces yet. But somehow, according to Wall Street, it's supposed to carry the entire global economy on its back. The hype is staggering. You've got people pouring billions, not millions, billions, into companies that have no earnings, no sustainable business model, and in many cases, not even a real product. We've seen this before. Remember the dot-com bubble? Same exact psychology, different packaging. Back then, companies put .com in their name and boom. Instant valuation. Today, you slap AI powered on a press release and the stock jumps 30% before lunch. And here's the part the mainstream won't talk about. All these companies playing the AI game, they're drowning in debt. They didn't build this technology out of revenue. They built it out of cheap money, zero interest rates, QE, trillions conjured out of thin air. That era is over. The loans are coming due, the refinancing costs are exploding, and the burn rate is eating them alive. This isn't speculation, it's math, and math doesn't lie. You want to talk about AI leadership? China's going to own this field. Forget the fantasies pumped by US tech CEOs on CNBC. Look at the numbers. In the year 2000, only about 10% of Chinese 18-year-olds went to college. Today, it's nearly 70%. And these aren't degrees in underwater basket weaving. These kids are studying engineering, mathematics, physics, computer science, the real stuff. Meanwhile, what do we have in America? Declining test scores, student debt slavery, and college programs where people major in outrage studies. China didn't get smart by accident either. Go back to the World Trade Organization. China officially entered in December 2001, just 2 weeks after 9/11 had Americans distracted. And what happened? Their GDP went vertical. We're talking rocket launch. And right alongside that economic explosion, China invested in education and science at a scale the US hasn't matched in decades. Now they're dumping billions into AI. Real AI, not the hype-driven stuff. Look at the company DeepSeek. They built an AI model for around $6 million. You know what some American firms spent on similar initiatives? Upwards of $100 million. And guess what? Many of them are still losing money. China isn't just innovating, they're optimizing. They're doing it cheaper, faster, and smarter. The West better wake up because this isn't the 1990s. This isn't the era where you could outsource your manufacturing, hollow out your labor force, and somehow think you'd stay competitive in the next big technological wave. The future doesn't belong to the country with the biggest social media platforms. It belongs to the country that actually knows how to build things. But AI speculation isn't even the most dangerous bubble forming right now. You want a real crisis? A real collapse trigger? Look at commercial real estate, specifically office buildings. This is the story nobody in the corporate media wants to touch because it reveals the truth. The system is cracking. Before COVID, US office vacancies were around 11%. Today, about 20%. Double. Office towers, entire floors, entire blocks of buildings, empty. Companies aren't coming back. Workers aren't coming back. Remote work changed the entire landscape, and the old system isn't returning.
What do you make of the government shutdowns, and how do you think it is impacting what we're doing?
It's theater. I think it shows people around the world that government's function is not to serve. It's rather to rule. You are seeing theater in support of political posturing of party elites to the body politic. It's disgusting. First of all, the government isn't shut down. They're shutting down some services. Some people aren't getting paid, but prior shutdowns have shown that they will get paid. So what this really is political posturing. If we actually had a government shutdown, that would be progress. If we actually had a government shutdown, that would be real progress. That will never occur. It doesn't serve the interest of any of the political class.
Do you see merging into a Doge 2.0 scenario, maybe using it, and I think one of the media outlets used the term cull the herd?
We never had Doge.
Yeah.
We never did. Doge was also theater. It was well pointed out by David Stockman that there was never an intention to reduce the size of government. There was an intention to change who the beneficiaries were. The Department of Government Efficiency gave way to the Big Beautiful Bill, which prophesied the second largest deficit in recorded history. So Doge 2.0 assumes that a Doge 1.0 existed. It's important to note that this is all theater. It was never meant to occur. It was always intended to mislead. And in that, they were extremely successful.
What is the underlying agenda then? Like, what's maybe even the end goal?
Power, naked power. The ability to benefit those constituents who are close to you at the expense of others. H.L. Mencken famously said, elections are everywhere and always advanced auctions of stolen property. If you think about an election in that fashion, you'll understand them. A saying that goes further back, I think it was Gore Vidal, that said you can understand the political process if you look at the origin of the word. Politic, poly from the Greek for many, tick from the English colloquial for small blood-sucking insect. If you believe that the role of government is somehow to do good, you will continue to be hoodwinked and swindled. If you understand them for what they are, small blood-sucking insects, if you understand the elections for what they are, advanced auctions of stolen property, sadly to say, if you become sufficiently cynical, you will understand the role of government. People pay more attention to liquidity than they do solvency because people hate arithmetic. If you look at the S&P 500 in the period 2000 to 2025 and your denominator is gold rather than the dollar, the S&P 500 has been in a bear market for 25 years. If your denominator is fraudulent, then you see us in a bull market. I mean, this is really pretty simple arithmetic.
It is.
I have, as an example, I've maintained liquidity in US dollars, but I've saved in gold for 25 years. And when I look at the part of my ledger that's constructed in gold, I'm struck by how cheap things are. Energy's cheap, food is cheap, housing's cheap. What I use as my denominator, the US dollar, things are expensive.
Yeah. It seems like QE is back on the horizon, or it's at least not being called that.
Well, you will see that they added 26 billion to the system last week. So when somebody says, when is quantitative easing going to happen? I say, last week.
Yeah, it's already, we're in the middle of it.
Yeah, we're in it.
Because wasn't it like we're moving quantitative tightening, we're letting some of those mature, like mortgage bonds, like mature, but we use that money to reinvest and buy short-term bills?
And that's very interesting. I mean, that to me is the crux of maybe what we talk about for a little while. The Fed is actively participating in the short end of the curve.
People keep asking, Gerald, why are the markets acting like nothing's wrong? And I tell them, because markets don't react to reality, they react to fantasy. They react to propaganda, cheap money, and manipulated expectations. They react to the illusion of growth. But beneath all of that, beneath the headlines and the hype cycles and the political stagecraft, the foundation is cracking. And when the cracks grow wide enough, the markets don't drift down. They collapse. Not in a gentle slope, in a free fall. And the triggers are already in place, scattered like dry brush waiting for a spark. The biggest spark is war. You've got tensions rising everywhere. Middle East, Eastern Europe, Africa, South China Sea. It's not one conflict, it's a trend line of escalation. You want to know the real driver behind rising prices? It's not just supply chains or central banks, it's geopolitical chaos. When countries start throwing missiles instead of negotiating, when armies start moving instead of diplomats, economies break. There's no such thing as a limited conflict anymore in a globalized system. One strategic incident, one blockade, one cyber attack, one oil disruption, and the shockwaves travel around the world instantly. Markets are not designed to absorb shocks at scale. They pretend to. They talk about resilience. But when hit with multiple shocks at once, they unravel. Now mix that with the commercial real estate bomb we talked about, the AI bubble, the bank vulnerability, the debt explosion, and the political dysfunction, and you've got the perfect storm. You've got a situation where the system is stretched so thin that any disturbance, even a small one, becomes catastrophic. We're watching countries prepare for this. You think China is buying record amounts of gold for decoration? You think Russia is building reserves because it's fashionable? You think central banks around the world woke up one day and decided, hey, let's buy more gold because it gleams nicely in the summer sun? No, they're preparing for a monetary reset, a financial realignment, a new world order in which US dominance is no longer guaranteed. And what is America doing? Investing in AI fantasies, blowing bubbles in the stock market, debating culture wars, running the largest deficits in history, and pretending everything is fine because the Dow is green for the day. That's not a strategy. That's denial. That's delusion. That's a society hypnotized by its own propaganda. Look at household debt. Credit card debt is at record highs. Auto loans are defaulting at rates not seen since the financial crisis. Student loans are crushing a generation that can't buy homes, can't form families, can't save money, and can't move upward because wages haven't kept up with inflation for decades. Meanwhile, the government keeps borrowing trillions with no plan to pay it back. Not some of it, all of it. It's comical. The US debt to GDP ratio is over 120%. Historically, countries that cross 90% end up in the danger zone. We blew past that years ago. The only reason the system still functions is because the dollar has been the global reserve currency. But that privilege is eroding, slowly, quietly, and unmistakably. You know what the BRICS nations are doing? Building alternative payment systems, buying gold, reducing dollar-denominated trade, forming trade corridors that bypass the Western banking system entirely. This isn't theoretical. This isn't speculative. This is happening right now. And once the world reaches a critical mass of dollar alternatives, the US will face the one economic environment it cannot escape, a world in which it can no longer export inflation. When that happens, prices will explode at home. Not gradually, violently. People will look back at 2022's inflation spike and call it the good old days. Let's get back to gold, because gold is the barometer of fear, reality, and truth. Right now, gold is behaving exactly the way it behaves before a historic run. The consolidation around $4,000 is textbook. Markets need a base. They need a floor. They need the weak hands shaken out and the gamblers flushed away before the big move begins. Once gold stabilizes at that level, and it is stabilizing, the rally will not be subtle. It will be sharp, aggressive, and fast. Why? Because when panic hits the markets, people don't nibble at gold. They lunge at it. Look at what happened when just 3 banks collapsed in 2023. Gold didn't inch up, it spiked. Now imagine what happens when 30, 40, or 50 banks come under pressure because commercial real estate implodes. Imagine what happens when office towers default, loan books melt down, and the contagion spreads across regional banks that are already barely solvent. That's not prediction, that's trajectory. Silver will move even faster. Silver is the most explosive monetary metal. It always has been. When gold rises, silver doesn't just follow, it vaults. We've seen silver trade between $51 and $54 recently, breaking resistance levels that held since 1980. That's significant, that's structural. That's the kind of move that precedes a run toward triple digits. And don't think for a second that geopolitical chaos isn't fueling this. When uncertainty rises, gold rises. It's one of the most consistent correlations in history. But in this environment, we're not dealing with one uncertainty. We're dealing with many. Political instability in the US and Europe, war in multiple regions, currency volatility, supply chain fragility, energy insecurity, technological disruption, banking weakness, economic slowdown, social fragmentation. Every single one of these factors by itself could push gold and silver higher. Together, they create the perfect powder keg. People say, Gerald, are you being overly dramatic? No, I'm being accurate. I'm being honest. I'm doing what the media refuses to do. Connect the dots. You cannot have massive debt, declining real wages, collapsing commercial real estate, speculative bubbles in AI, a fractured global order, rising war tensions, and a government that functions like a circus, and expect financial stability. You cannot ignore these signals and then act surprised when the system buckles. Look around. Inflation isn't going away. Interest rates aren't going back to zero. Real estate isn't bouncing back. The labor market isn't strong. The tech bubble isn't sustainable. And the geopolitical landscape isn't calming down. This is the era of instability, the era of transformation, and precious metals are the safest bridge across it.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.